This conference will now be recorded.
Yes, I'd love to. First of all, I say welcome to everyone. We're really happy that you could join us today. This whole webinar will be about helping you navigate the different programs that are out there right now. We know that there's a lot being thrown at everyone right now, and we just want to help you sift through all of those and see what can help you and your business and what cannot. So your lines will be muted. How we will handle questions is you can either chat. In the upper right corner, there's a little chat bubble. You are able to type in your questions. Just be sure that when you do open that chat, there is a drop-down menu at the very bottom, and it gives you options on who to send your chat to. If you want to do that to the presenter, that would be great. And we will do our best to try to get all of the questions in during the webinar, but if we don't, we will follow up immediately after. Otherwise, if you don't want to use the chat function, you can go ahead and email us at relief@mnretail.org, and that'll work just fine too. We'll try and get everyone's questions answered as soon as we possibly can. I just want to let you guys know that this webinar is being recorded, and we do have the option of making slides available after the webinar. So if you would like that, just reach out to us and let us know. I'm going to introduce myself. I am Savannah Sepik. I am the Government Relations Manager at the Minnesota Retailers Association. We also have Tom Johnson at Boulay. Tom Johnson has been a partner at Boulay since 1998. With more than 30 years of experience, Tom specializes in providing taxation and management consulting services for a variety of industries, including professional services and closely held businesses. Tom researches complex tax issues and recommends a creative solution to these issues. Boulay has been working extremely hard with their clients to navigate the different relief options throughout this crazy time. Also, we have Bruce Newstead, who is the president of the Minnesota Retailers Association. And with that, I will turn it over to Bruce.
Great, thanks Savannah, and thanks everybody so much for popping on today. We know that this is an extremely challenging time for retailers, and hopefully today we can give you a few nuggets that can help in this moment. But I just again want to recognize, I know there's so many things in retail that you normally can't control, and today there's even more, and that makes things extremely difficult. Today we want to provide you just a look at the relief layers that are available. We're going to talk about some local options, some state options, and some federal options. We're going to really zero in on a program on the federal level called the Paycheck Protection Program. But before we do that, I just again want to thank you all for coming and joining us, and I want to thank our friends, our shopping malls, shopping centers, and your tenants for joining today. We know this is, again, an extremely difficult time, and know that we here at the association are here to help retailers, members or non-members today. We've spent literally the last week and a half, a lot of times with individual retailers, just thinking through options as you try to navigate this difficult time. So we're going to get right into the different layers of relief. We're going to spend about 10 or 15 minutes on local, state, and a piece of the federal, and then we'll turn it over to Tom to dive into the Paycheck Protection Program a little deeper. But this first screen here, I just want to mention that there are local resources available. There are state resources, there are federal resources. In theory, you see the dollar signs there. The higher the level of government, the more money that is generally available or more relief options. That's not always the case in each pocket, but that's really the way things are designed. And if you take a look at the rabbits there, that's sort of your speeds too. Your local resources are designed to be really, really quick. Your state resources take a little longer, but designed to be responsive than your federal resources, just because as those programs roll out, they roll out across the country, they tend to take a little longer. So just a quick note on that. I know that we should have probably sent you this slide right here in advance. By the way, I apologize for not doing that. This is probably that slide where you take out your phone and you take a quick picture because it's the one that makes things all make sense. But this gives you an idea of the programs we're going to talk about in each bucket. And I think it'll make it a little easier to follow along. So again, we'll have some local resources. We'll have a couple programs in the state area that we think will interest you. And then there are 6 or 7 programs at the federal level that we think are worth talking about, but really, again, we'll zero in on that Paycheck Protection Program. So getting us right off into the local level and starting there, it's really important that you know that there are local resources available, although I will say most of those local resources aren't always money and loans. There's an exception to that today, but generally your local resources are going to be local economic development, city and county folks that are really dedicated to working hard to help you find what resources you need today. So we see some activity in St. Paul, we see some in Minneapolis, we see some in other cities around the state, and I'm not going to take a lot of time diving into these, but just know that one of your options is to make an outreach to your local government and have some conversation about what they are doing and how they can help you navigate things. Minneapolis is a great example of a city that's really focused its COVID-19 efforts on how does it assist small businesses and businesses in general. So in Minneapolis today, you don't necessarily have a fund that is available, but what you do have is some expanded business technical assistance. So they've kind of taken the programs that they've had in place already to help businesses navigate these difficult times and redoubled down on those. Now, I will say in Minneapolis and other cities around the state where there is some local licensing, you've seen some relaxing of licensing, some even waiving of licensing and some delayed of licensing fees and those types of things. So again, just want to mention that it's worth having a conversation with your local unit of government on what's available to you there. If you are in St. Paul though, pretty important that you know that St. Paul has a program up and running, and I think as of yesterday is fully functional, called the St. Paul Bridge Fund. So if you happen to have a store in St. Paul, know that you're eligible for up to a $7,500 grant from the city. And you just have to operate in the city for the last 3 months, have revenues up to $2 million and be impacted by COVID-19 and be a retail-oriented business. For most folks on the call that are in St. Paul, you would probably be eligible for that, and know that that's a quick access point for you. And that's really designed to help you pay your rent and a few bills in the immediate. So if you're in St. Paul, it's definitely worth hitting the city's website today and taking advantage of that. We're going to pop on to the state level now. And from our perspective, there are really two main tools, relief tools that are available for you at the state level. And we'll dive into both of those real quick. First off, unemployment, and I know people generally think of unemployment just for an employee that was laid off, and that is certainly the case. That benefit is available to your employees who are impacted, but there is also a program at unemployment for business owners. So if you have been paying into that fund in the past as a business owner, don't forget to remember that if your revenues have been impacted and what you take out of the business has been impacted, there is a great unemployment option there for business owners, and there's some flexibility around that program right now. So we have seen a lot of retailers do some layoffs, understandably, when revenues have dried up, and the unemployment program has been a great refuge for those employees that have been impacted. But again, just wanted to mention the business owner benefit. New too is if you're self-employed, which I think there are a lot of retailers that are, or you're an independent contractor, due to some federal activity, you should have access to unemployment shortly as well. That program is called the Pandemic Unemployment Assistance Program, if anybody talks about that. But what that does is really allows you, as an independent contractor or somebody who is self-employed, access to the unemployment system here in Minnesota via the federal government. That program is not quite up yet. It takes some work for the state system to get kind of retooled for it, but it has been authorized by the federal government, and Minnesota is waiting some further federal guidance and some systems work to get that up. But again, if you're self-employed, keep in mind that's a great option for you right now. And then also just wanted to mention a program at the Department of Employment and Economic Development under unemployment called Shared Work. And that is if you've got 2 employees that you can combine their position into one, which results in a reduced number of hours. The unemployment program will help shore up that employee, not totally, but help shore up those 2 employees that are doing shared work. So the idea there is you take 2 jobs, you combine them into one, you have the 2 people do the job, you pay each of them half of their salary or hourly wage, and the unemployment program then helps get them closer to what they would have made before. It's not going to get the employee all the way back to what they would have made, but it will help get them closer. So that's a great program where you can actually still get some productivity out of employees and some help from the state. So that's an often underlooked program, so we wanted to make sure we mention that today as a state level resource that is available to you. Also wanted to mention Minnesota was one of the first states to be able to access essentially an unemployment bump from the federal government. That actually kicked in yesterday. So if you do have employees that were laid off and were essentially getting half of what they were being paid previously, they're going to start getting that $600 federal bump as of yesterday. They don't have to do anything else. If you're talking to employees, you don't have to do anything else. That will automatically happen in the state system here, but good to know that that help is on the way as well. The one other big program that we want to talk about at the state level is through the Department of Employment and Economic Development. It's called the Small Business Emergency Loan Program. It's probably the program that retailers were most excited about when the governor here ordered the shutdown of some businesses in the stay-at-home order. And I shouldn't call it a problem, but one of the deficiencies in that program is the eligibility really is limited. If you are a bar, a restaurant, or what the state called a place of public accommodation, so think of that as a bowling alley, a golf course, places like that that was shut down due to one of the early shutdowns, not the essential, non-essential business shutdown, but the early shutdowns for bars and restaurants. This program is available for you. If you are not in that category, you're going to find that your business is not eligible for this emergency loan program, which in some ways is too bad because this is really designed as a bridge program at the state level to get you to federal funding. But again, it is very limited in its scope, unfortunately. And but again, if you are a bar, restaurant, bowling alley, golf course, that type of business covered on that executive order early on, this is actually a great loan program for you to take a look at. Just a quick look at that program. It does allow you to access $2,500 to $35,000. As I mentioned, it's only accessible to those businesses that were impacted by Executive Order 2002 and 2008. But the great thing is about it's a 0% loan program that can run up to 5 years. You don't have to pay on it for 6 months. There are a couple other caveats if you're looking at that and you're a restaurant, bar, or a place of other public accommodation, and that is you have to have been turned down or unable to get a traditional loan in the regular market right now, which, by the way, if you're one of those businesses, you can probably get turned down pretty quick if you want to access this program. But know that that's one of the pieces too. You have to have sought some traditional financing through a bank, credit union, or other financial institution and have been denied for that. That makes you eligible for the loan too. So those are through certified lenders, not traditionally banks. Those are through, I think, 12 or 13 economic development, business development institutions throughout the state, like Women Venture and things like that. So there's a good list of those, but know that that is available to you if you fit into that category. There are some backings that are needed on that too, which make it a little less attractive for some folks as well. But again, just to emphasize, you really have to have not been able to get credit somewhere else to access that and be a bar, a restaurant, or a place of public accommodation. The other program that's important to know about at the state level, there's this thing called the Small Business Loan Guarantee Program. That's actually nothing that you can apply to. It's a program that the state works with financial institutions on, where essentially they provide a bigger guarantee for in a riskier environment for retailers like you that might want to take out a loan. So I mention it not because you can go to the state and ask for this loan, but you can go to your local financial institution and they're going to have some programs that are available because they're backed by this small business loan guarantee. That's a program that will be open to folks that are under 250 employees, up to $200,000. And what the state does is guarantee up to 80% of that loan, up to $200,000. So it makes it a little easier for the financial institution to take a risk with the loan right now. So again, not a program you can go to the state and get, but you can go through your local lenders to access that program. All right, we're going to shift now to the federal pieces that are available, and you can see on your screen there, there are a good number of them. The first couple will kind of glaze over rather quickly because they're not necessarily programs that are available for you, but there's programs where you can get some money from the federal government if your employees use them. And then we'll end with the Paycheck Protection Program, which is kind of the hot topic of the day. So let's start out with just a quick reminder that you're going to get, any employees or business owners will get that $600 unemployment bump via the federal government, just as a reminder there, a great tool from the federal government. A couple weeks ago, there was a bill passed at the national level called the Emergency Paid Sick Leave program, and that's really designed for small businesses. If you have an employee that has a COVID-related illness or is taking care of somebody with COVID-related illness, it allows them access for basically 2 weeks or up to 80 hours for full-time, or whatever the 2-week average is for a part-time employee. It allows them that time in emergency paid sick leave. You as an employer actually, via the federal law, have to allow employees to access that program, and you get a refundable tax credit on the back end. So you're going to make the expenditure right away for any employees that you have that use that program, but eventually you'll see a refundable tax credit through Social Security. So it's a little bit of a complicated program. You already probably know right now if you have an employee that has invoked that, and we could talk with you more about that offline, but know that that program is out there, but it's really oriented toward employees, but there is a refundable tax credit for you as the retailer. The other piece to know about in that area is there is some expanded Family Medical Leave Act. It takes away some of the restrictions when an employee is afflicted by COVID-19. And if they've worked for you for 90 days, they can take an expanded Family Medical Leave Act. Again, this is applicable to businesses under 500 employees, and does have the refundable tax credit on the back end too. And again, offline, happy to talk to anybody who's working through any of those issues right now. So that gets us to kind of the federal programs that you want to talk a little bit more about today. And we're going to start with one called the Small Business Debt Relief Program. Again, that is a national program. And that, again, you might know about if you are an existing SBA, if you have an existing SBA loan. So if you have a loan from the SBA, chances are whoever initiated that loan with you has reached out to talk to you about small business debt relief. If you don't have a loan, this is not a new loan program that you can access. This is really just some relief for existing loan owners. So you can see relief up to 6 months, and you work through your lender on that. But know that that's called the Small Business Debt Relief Program. Next on the list is what's called the Small Business Administration, or SBA, Express Bridge Loans. And again, this is a program that is geared toward those of you that might have an existing SBA relationship or a loan, and it allows your lender to quickly get you up to $25,000 as a small business based on your current relationship. So again, a program, if you have an existing relationship, which would be a loan with the SBA, you can get a quick bump of up to $250,000 as a loan. But again, you probably know about that if you're an SBA, if you have an SBA loan right now. Next, we'll go into areas where you can access some SBA funding, where you might not have a relationship with the SBA right now. The first one I want to talk about is called the Main Street Business Lending Program. And although the program is called the Main Street Business Lending Program, it's largely billed toward mid-sized businesses. If you look on the screen there, you'll see it's really geared toward employers with 500 to 10,000 employees and with $10 million to $2 billion in revenue. I looked at our attendee list. I don't think too many of you fall into that category, so we won't spend a lot of time on this program. The other thing to know about this program is it's brand new. I mean, it was authorized in the CARES Act at the federal level a week ago, but it is brand new, and we're just seeing the pieces of the program come out right now. So know that that program is in its infancy. Not too many people know much about it. But again, it's called the Main Street Business Lending Program, but in my mind, it's not really oriented toward small Main Street businesses like most of us would think of. So 500 to 10,000 employees. All right. So that gets us to kind of two federal tools that we'll spend a little bit more time on. And Tom, we'll get ready to turn over to you in just a moment, but I wanted to mention one of the tools that came out early on called the Economic Injury Disaster Loan, or EIDL. We have seen a lot of retailers take advantage of this particular program. And the reason they've done it is that you can be self-employed, you can be an independent contractor, you can be a sole proprietor. As long as you have fewer than 500 employees, you can actually access this economic injury disaster loan program. And for practical purposes, what the program does for most retailers is allows them to access a very quick $10,000 disbursement that ends up looking and feeling like a grant. So we've seen quite a few retailers of all sizes take advantage of this particular program that's available through the Small Business Administration. You can get up to $2 million. The loan is deferred for 12 months. You can stretch the loan out for 30 years. It does have an interest rate to it of 3.75% for for-profit retailers. And it can be used for payroll, accounts payable, and other bills. It was really designed early on in the COVID-19 response to be a quick access of cash for retailers. It does have some interaction with the Paycheck Protection Program we'll talk about in a minute, but if you haven't taken a look at that emergency injury disaster loan program for that upfront money, do take a look at it. It's definitely worth contemplating. And it is a tool that we're seeing a lot of retailers and small businesses take advantage of because of that quick $10,000 disbursement that is likely in the form of a grant. So again, that's a big one to key off of. There's more information on that program at the Small Business Administration. I'll take a pause there and mention that unless you signed up for the webinar in the last 15 minutes, we sent to you earlier on a PDF that has a bunch of links for all these programs, and we'll resend that out along with the slide deck after the presentation here. But that's definitely a program that's worth taking a look at, and we've seen a lot of retailers take a look at that program. Okay, just a reminder, and thanks for those of you using the chat. We'll get to those, and thanks to those of you, you can certainly email your question to relief@mnretail.org, but if you can use that chat feature, that probably works the most expeditiously. And with that, we're going to turn things over to Tom at Boulay. Tom, thanks for joining us today. I know Boulay has been busy working with clients and lenders on this thing called the Paycheck Protection Program. We know it's very popular. We also know that it's the tool that Congress really likes and has poured a lot of money into. So Tom, I'll let you take it away from here.
All right, great. Thank you, Bruce. And we'll look forward to walking through the Paycheck Protection Program. If we go to the next slide. First thing we can talk about is just why is there this program out there? Basically, this is a government program that is established to provide cash for small businesses, basically for three purposes. They want to keep their workers employed, so they want to be able to keep paying people. So there's a big component of keeping people paid, keeping people working. The next piece is that you're going to use these funds to pay for rents and interest on debts paid. And the idea here is that you can either keep paying your mortgages or your finances, and you can keep paying your rents for the space that you have. The third one is utilities. So the benefits are to keep those bills being paid. The major benefit of this program, as opposed to other loan programs, is if you do certain things right, which we'll talk about later, this loan is a forgivable loan. So if you spend the money from this loan in the right places, you don't have to pay it back, which is, of course, a huge benefit. The other one that is a little bit surprising is typically when you have loans forgiven, that's considered taxable income. In this situation, it is not taxable income. So you will still get to deduct the expenses that you pay, but this is kind of like free money. So it's going to help you on your taxes later. as well. So those are the major benefits of the program. Let's go to the eligibility for the program. A lot of the same eligibilities as before, fewer than 500 employees. So most of the people on the call, again, it's going to include that. It does include your for-profit businesses, 500 employees or less, and it also does include charities. It includes churches, schools, your food banks, all of those kinds of things. So those charities that have really been struggling lately, they are going to be able to apply for one of these loans as well. And it's a real benefit for them. There are some exceptions to the 500 employees, and this gets a little confusing, but basically what they're saying here is that if you are part of an affiliated group where you're in the accommodation and food services, a lot like Bruce talked about earlier, pretty similar definition, that you can, that 500 employee limit is per location. It's not a consolidated group or affiliated group. So they did that because they know that these employees in the accommodation and food service industries were the hardest hit, and they wanted to make these funds available to the businesses that are run on those particular places. There also is an exception for larger businesses that have an SBA franchise identifier code. And I found a listing of what those are. It's like 93 pages of listings that have these special things. But in the shopping center retail environment, there may be some stores that actually qualify for that relief as well. So this is who's eligible. The main thing that you have to certify is on the bottom of this slide. It says you can certify that uncertainty of economic conditions makes the loan request necessary to support ongoing operations. That's the extent of what you have to say. It's a very much, do you feel like you are uncertain about whether you can pay your bills? Have not met too many people who have trouble making that statement. There are a few who are either doing better because of this situation, or they have plenty of cash, so they're trying to make a moral decision if they should take this money or not. But for the most part, people are comfortable making that statement. The application process, you've probably heard about some of this. You can apply through an existing SBA certified lender, but they wanted to open this up much more. So basically, all federally insured depository institutions, your credit unions, they're all participating in this process, in the application process. And people always ask, where should I go? Is there a special bank that I should go to get this loan? What we have found is that the bank where you have the existing relationship is the best place to go. I put a caveat in there, with some well-known exceptions, and that was referring to the Wells Fargo, saying that they had capped out. Well, now Wells Fargo even has been opening back up, or they've been allowed to expand that. So that is what I would say. Your best bet is your existing banker relationship, and then I've seen better response from the smaller banks, more local banks, to working in this program than going to the bigger banks. So what you need to support the application itself is just a 2-page application, and it looks really simple, but there's a lot that goes into it behind it. You have to compute your payroll costs, and you have to be able to document those payroll costs. Typically, ADP or Paychex or somebody like that has a report that will get you the numbers to do that. There are also other statements that you have to make. Certain things like, you have to prove who you are. So a lot of them want your driver's license and things. So there are things like that. There are some caveats that you can't currently be under indictment or have on parole and some of those kinds of things as well. So, and those are right on the application that you have. So the process is that you prepare this application, you submit it to your lending institution, they approve it, they assign you a loan number, and that's what makes people happiest when they have a loan number, and then the bank submits it to the SBA for approval and funding. If we go on to the next slide, we've talked a little bit about what you use the money for, but the amount of your loan is based strictly on your monthly payroll costs. So if your monthly payroll costs are small, your loan is going to be small. It doesn't matter how big your rent is or how big your utilities are. The amount of the loan that you get is solely on your payroll costs. And basically, it's 2.5 times your average monthly payroll. And you have a couple different options on what you use for your payroll. Rules first came out and it said to use the prior 12 months. And it was really any prior 12-month period from when you're making the application. That seemed too confusing, so they went to say it should be the calendar year 2019. All of your payroll reports, your W-2s, your 941s, they're all going to be on the calendar year, so you can use that. That is probably the simplest, but they just came out yesterday or the day before with the approval to go ahead and use your prior 12 months. And where this makes sense is sometimes your prior 12 months payroll is higher than your calendar year 2019 payroll. So you're going to get a higher monthly average payroll using the prior 12 months versus 2019 calendar year. There are some different rules if you're a seasonal business, different rules apply. And if you're a new business, different rules apply. The main thing is that you had to have been in business on February 15th of 2020. So you can't start a new business now and apply for a loan. So the payroll costs include your gross wages and any wages in excess of $100,000 for an individual person, you have to back out. So you don't have to back out the whole $100,000 typically for an owner or a manager, but you're limited to $100,000 per person. You add in your health insurance costs that are paid by the employer. So not the cafeteria plan that comes out of the employee's money, but the employer's share. And the retirement benefits, if you have a 401k match, you add that in, and your state unemployment tax. So those are the amounts that you add up to get to your loan amount. Okay, next slide, Bruce. And then what you use that money for, we have an 8-week period after you get the loan, and you use those funds. If you use those funds for paying the payroll, paying interest on the mortgage debt, or rents, or payment of utilities. And there's a definition there of utilities, and notably absent is trash removal, but it's your basic utilities. And for a lot of people, your utilities are going to be rolled into your rent. So it's your base rent plus CAM is a lot of what we're seeing is what that is going to be. One of the questions that we get is, do we have to segregate the cash? No, we just have to be able to certify that the amount of loan that you got was used for these specific expenses. So that's what you're supposed to use the money for. And then if we go on to be forgiven, you get a loan proceeds, and 75% of it, that loan proceeds, has to be spent in the next 8 weeks, at least 75% on payroll costs, as defined earlier. That leaves the other 25%, up to 25%, to be paid on your interest or your rent or your utilities. If you do it right, that loan can be forgiven. To the extent the loan is not forgiven, there's a deferral of 6 months for when it's paid, and the interest rate is 1%. There are some rules about the forgiveness. Remember, the idea is that you are retaining employees or having employees on staff by June 30th of 2020. So if you reduce your full-time headcount, your loan forgiveness might be reduced, or if you decrease your salaries to people by more than 25%, your forgiveness might be reduced. So basically, you get the money, you spend it on these things, and you can either pay back what is not forgiven at the end of the 8 weeks, or you can pay that back at the end of the 2-year period. Next slide, Bruce. So the key dates here are that we started applying last week, I think it's Friday, April 3rd, for businesses. And this time period in the current program runs through June 30th. Independent contractors and self-employed can start applying tomorrow, April 10th. And people have been in a mad rush because they've seen that this number, it's $349 billion is allocated to this program. And that initial allotment is expected to run out well before June 30th of 2020. So people have been rushing to get it in. Just a little bit on where this program is. People have been applying with the banks. The banks have been reviewing and documenting the loans. They have been submitting them, or they've been approving them at the bank level, and then they take them and they push them through to the SBA. I've heard a couple of loans that have actually gotten funded so far, but most of them are still in this middle stage of either being documented or being submitted to the SBA. And Bruce, next slide. So part of what caused this panic of people really trying to get these loans submitted as fast as possible, the rules came out. They said, first come, first serve. So they said, you better get in line as fast as you can. The questions that come out about this is, will enough money be available to satisfy everyone? If not, will the amount available be increased? Will there be a second wave time period depending on how long this crisis goes on? And will other programs come out in the future? What I will say is that from the time, I think it was March 27th, when this program was signed into law to now, we get changes to the rules and updates about every 12 hours. So it's definitely a moving target, and things will continue to change as we go along here. But there's a lot of talk about how well this program is liked and that it's working, or it's going to work for the economy. So expect to see more of it in the future. So Bruce, with that, I will hand it back to you.
Thanks. Let's grab a couple questions. I think one of the things I see in the queue here and what we hear a lot of is just sort of questions about the timing. So I know there are folks that look at this loan and they say, okay, that's a good loan opportunity. If I can get forgiveness, great, but at least it's a good loan opportunity right now. And so they worry a little bit less about some of the forgiveness and the thresholds for forgiveness. So we know it's a good loan for that. But if you are looking to maximize your forgiveness on this loan, talk just for a minute about loan timing. So you apply for a loan and you wait a few days and you find out that you're accepted for the loan, and you wait a couple of days and you're funded. So money appears per the loan. How does that interact with when you want to or need to rehire employees to take advantage of that forgiveness?
Yeah, it's a great question. And so basically, from the time that you get the loan proceeds, you start checking on how you pay people back over the next 8-week period. So right now, we have a shelter in place through May 4th. And so that means a lot of these employees can't send their employees back to work. So when I'm thinking about this, I would rather get the money on May 15th, open my business back up, and then spend the money for the next 8 weeks from May 15th to July 15th to maximize the forgiveness. You will have rehired your people before June 30th, but actually spent money on their wages during that 8-week period. To get the money today, when you still can't be open and you still can't pay people to do any work, you're helping those employees, but you're not helping your business at all. So that's an interesting question. And it conflicts with the issue of, is the money going to run out? So I have to get it as fast as I can.
Right. So I know we had a couple questions just to underscore that. So that if you're going to maximize forgiveness, that 8-week period begins when you get your proceeds. So that's when you really have to be spending 75% of your loan on payroll and have to be paying people effectively at least 75% of what they were making before, correct?
Yes, exactly.
Yeah. So I do think that's one of the pieces where it's really important to work with your banker, your business advisor, a person like Tom to really figure out your timing on this, because we know there are a lot of retailers who laid employees off. Those employees are on unemployment, but they're struggling with a couple of the variables, and that is when to bring those employees back. So one of your marks is obviously when your business can reopen, and we'll talk about that toward the end of the presentation today. But again, just to underscore, Tom has said, when you get those loan proceeds, if you're going to maximize your forgiveness, the clock starts ticking, and you need to have people back on payroll and paying those people. And the question we always hear, Tom, is what if I'm timing it out and I think I'm going to be open on May 4th again, and I want to have everybody back in place, ready to roll on May 4th. So I hire, the 8 days before that to get everybody back in, but I actually don't have anything for them to do. Is that a problem at all under the loan guidance?
No, as long as you pay the people, they don't actually have to be working. That's part of the idea, is so you can continue to pay them. So you could pay them without having anything to do, and that you would almost end up being a funnel from the government to your employees, not getting any benefit for the business owner. So I don't see a problem doing that, other than it's not producing on the business.
Yep. And I think rightfully so, retailers are really thinking through all the scenarios right now. Somebody asked, what happens if I'm actually, there's this June 30th date, and what if I'm not really able to be open by June 30? That's sort of, well, it's very impactful to you as the retailer. It's irrelevant for the loan program. The loan program wants to see you spend your 75% of your loan proceeds starting on the day you get the proceeds, regardless of if you're opened or closed, right?
Yes. And when you think about 75%, if you had the same number of employees after you get the money as you had before, that should really cover 80% of your payroll cost, because it's 80% is 2 months worth, and then you've got the other 20% either for the rent and utilities and those other expenses.
Great. Good. So hopefully that's fairly clear relative to the 8-week period if you're looking to maximize your forgiveness. I know we got quite a few questions on that. Another question related to that, Tom. So if you aren't going to maximize your forgiveness, what are some of the loan stipulations? Like, how long is the loan available for? And I guess the question is it a competitive loan in the marketplace today? Forgiveness aside, is it a good competitive loan in the marketplace today?
Well, I would say it's very competitive, because first, you're not doing any loan documentation. You're not qualifying for the loan. So if you're approved, you get the loan. From the time you get the loan, there's a 6-month deferral on any payments. And there's a total of 2 years to pay it back. And the interest rate is 1%. So you're not going to get any money for 1% anywhere else. And you basically have 6 months of no payments and then another 18 months to pay it back. And your banker is basically just getting that 1% interest rate on your money that they borrowed you. So yes, I would say as long as you're going to be in business and you can pay it back later, it's a very competitive, good loan.
Yep. And Tom, any sense, I know this really depends on the lender that you're going through, but what are you guessing you see from a turnaround time on these loans? So you send your loan into your bank has to process it, send it to the SBA has to come back to the bank. What are you generally seeing from a turnaround time on these loans?
We're seeing promises that are continually being extended. I think now we're getting closer to where SBA even has their portals open so they can accept applications. So I think that is finally happening. And, the program opened April 3rd. Now we're on April 9th, and we're hearing that some loans are actually getting approved all the way to the SBA level. Once the SBA approves them, then it's just up to the bank to fund them, and they can borrow the money to fund them. So I'm guessing once the SBA actually does the approval, it's sounding like it's 2 to 4 days. It's the backlog appears to be at the SBA level right now.
Got it. And I think folks are thinking a little bit about the timing and the 8-day clock that would tick when you get your proceeds relative to trying to maximize forgiveness. Can you submit an application and essentially pick your funding dates, or once you submit your application, are you sort of in the process and things are going to happen at the rate at which they do?
That's a great question for the banker. I believe that the bank, once they get approval, that they could work with their client and determine when they want that loan funded. So it's been approved, then all they have to do is disperse it. And that's, I think, where your flexibility is on the timing of funding. I think the bank could do that, but I honestly haven't heard a lot about that issue.
Yeah, likely a bank by bank issue. But Jennifer, that was a great question. Appreciate it. Another question here, and an item we were going to mention in a moment, but let's cover it now. So we talked about this $10,000 economic injury disaster loan grant that folks are grabbing. Does that interact with the Paycheck Protection Program? And I will say what I know there is if you got an EIDL loan, they're actually looking to have you convert that into the Paycheck Protection Program. So there is some interaction there. In fact, there's some scenarios under which it has to be converted, which, by the way, is probably okay because the interest rate is better under the PPP versus the EIDL. But Tom, can you mention again just sort of the interaction of that $10,000 grant with this particular loan program?
Yes, I believe that you roll that number in. I'm just looking at one. I'm sorry, I'm not seeing it. But yes, so you add that to the amount that you get, and you add that. If you got the $10,000 earlier, you just put that in as an extra amount on this, and it gets rolled into this program, I believe.
Right.
And I think
So
that's if you got the $10,000, that's automatically a grant. And I think you just have to tell them that it's part of this model.
Right.
Yeah.
Yep, I think that's exactly right. And then we had a couple questions about, again, just hit us over the head with it. Where do you apply?
Where do you apply? You go to your regular bank. It can be a credit union. It could be all the community banks are doing it. The U.S. Bank, the Wells Fargos, the Bremers, all of these banks are going ahead and processing these loans.
Great, thanks, Tom. And go ahead if you have any other questions on the PPP. Go ahead and click in them into the portal there, into the chat function. We'll try to catch a couple more of those at the end here, but there's a few things we want to cover as people start to pop off. So I know we talked about other CARES Act items. We talked about the Main Street Business Lending Program. The other thing I wanted to mention is that if you are a mid-sized business, there are some direct loan programs available through the SBA. Again, kind of looking at our constituency on the call, I don't think we have too many of those, but know that that is available as well. So I think that wraps up just a quick look at the local, state, and federal relief buckets. There are a few other things that we wanted to share with you. And first and foremost, again, we will send around a resource sheet if you did not get it that has some links to some of these pieces. But again, I just want to reinforce, this is a great time. Whether you have an existing relationship with a business advisor like Tom or a banker, now is a great time to develop that relationship if you haven't yet, because there are some decisions that you need to be made relative to timing on loans and how loans interact with each other. But I hope we provide a decent look at that for you today. But certainly your business advisor is a great spot to go for more information. The State Department of Employment and Economic Development, called DEED, is a good spot. They've actually got a good portal site which looks at some of these resources as well. And of course, the Small Business Administration and Treasury. So Tom covered kind of what does the next 60 days look like. And I know this is weighing on a lot of you relative to stay-at-home order, et cetera. I'm sure everybody heard, but if you didn't, the governor yesterday extended Minnesota's stay-at-home order to May 4th. So for most retailers, the status that you're in right now, either essential, non-essential, or open and closed, will remain through May 4th. May 4th kind of syncs up all the dates here in the state. It's the date the school distance learning is scheduled, at least at this point, to end. It's the date where the restaurants and bars and places of public accommodation have extended to their current scenario, and it's the date non-essential and essential businesses are under the current restrictions as well. So May 4th is your new date to take a look at. I do think there may be some modifications by the governor over the next few weeks, but quite frankly, I think there's going to be fewer of those than what people would hope. So yesterday, as an example, if you own a landscaping business or a garden center, the governor said, hey, you get to work with the Department of Agriculture on some social distancing, and you can actually be open. I don't think we're going to see a lot more of those beyond maybe golf courses and things like that. So I think, unfortunately for most of you, the scenario that you are in today is likely the scenario you are going to be in between now and May 4th. So it's a great time to actually look at the decisions that you have to make, because you sort of know what things are going to look like for the next 4 or 5 weeks. Tom mentioned that there may be some more funds available in the Paycheck Protection Program. We do think that's sort of the darling of Congress right now. So there's already been some talk about some more funding for that program. I think that takes the pressure off of quick decisions that need to be made on this program. I think you can take a few days and really think about and work with your business advisor about what's your timing on that loan program. But no, I think, again, how your life looks today is likely how your life is going to look between now and May 4th. As we do inch closer to May 4th, we've got a few resources here at the association that we hope are helpful on our website at mnretail.org/COVID-19. We do have a best practices for stores that are able to be open. And even if you're not able to be open today, it's worth taking a look at those best practices, because my guess is that if you are able to open on May 4th, you are going to be subject to some version of these best practices. So right now, these are kind of our encapsulation of voluntary things that retailers should be thinking about. But we think it's likely the governor is going to, when May 4th rolls around, if he doesn't extend things, he's going to roll things out in a way where there are some best practices protections for your employees and your customers. So feel free to take a look at that list that we have put together, just as a little bit of a preview of what that might look like. So with that, I'm going to go back real quick to the questions here and see if we can field any more. Yep, so we had a great question, and this is back to the state program. So thinking of the state programs available, and just to differentiate, that DEED small business loan program is really geared toward restaurants, bars, and places of public accommodation that were closed by the governor in the earlier orders. So we have asked, and will continue to ask, that that loan program be opened up to all retailers that were impacted by the order and deemed non-essential, because we do think that's still a good bridge loan opportunity between federal money or relative to federal money that's available. So again, we will continue to advocate for that and bring that up. But right now, that loan program at the state level is just geared toward those. And I do think, Jennifer, a great question here, that we will see some more cities that do things like St. Paul and offer some more small businesses. I guess taking things back a little bit, cities were authorized to use some existing loan money, revolving loan money that they get from the state for COVID-19 impacted businesses. And so I think we will see in greater Minnesota and the metro area more cities that have those funds available roll out some micro loan and grant programs to retailers. Hopefully that will happen sooner than later. There was a question here too, a really good one about timing and what happens if you apply for a loan and it takes a while, you don't hear back right away. I do think, we always advise people, if you put in an application and if you haven't heard back from anybody on anything in a full business day, so think of it as 2 days, but a full business day, it's time to reach back out to the lender that you are working with or have your business advisor. One of the things that we see is a lot of these application processes are technology driven. Technology is great, but don't always assume that your paperwork got where it was supposed to. So I think if you think of your terms of giving folks a full business day to receive your application and provide you some feedback, that's a reasonable amount of time. Tom, does that make sense to you?
Yes, it sure does.
Great. And then just to re-emphasize a couple of questions here. So if you are a restaurant and you were impacted by one of those earlier executive orders, can you apply to that DEED bucket, you can, yes, and quite frankly, you probably should. You should really, really take a look at that. So again, if you're a restaurant, a bar, a bowling alley, definitely look at that deed money. Taking that deed money does not preclude you from taking the federal PPP money. In fact, you've seen like the interaction between the EIDL and PPP. The units of government generally contemplate those things. So there aren't too many things where we've seen if you're taking money from the state, I shouldn't say taking, if you're getting a loan from the state, you can't also get a loan from the federal government. So sometimes it makes sense to look at the multiple buckets that are out there. But again, a great question for your business advisor and your banks as well. All right, well, I think that gets us generally to the end of our webinar here. But I just want to thank you so much for joining us. In the sheet that we'll send out as a PDF, again, there'll be some contact information for Tom. I know he'd be happy to chat with you, some information for us here at the Retailers Association. And again, thanks for the feedback on loans and loans availability and what legislators can do and the governor can do today to be helpful to retailers. It's important that we continue to make those asks. I know that's not an economic item, that's a political item, but we know that the situation is extremely difficult for retailers right now. And we at the association here want to do our best to present the solutions that make sense to you. And so we'd love to hear those. So feel free to use that feedback mechanism to let us know what would be helpful to you as well. So again, thanks to our friends at the shopping centers, the malls, and you that they're tenants. Again, we feel for the situation you're in. We want to do our best to help. If we can help clarify anything that we talked about today, definitely let us know. But with that, we'll end our webinar today and wish you the very best over the next couple of days. Have a great day, everybody.